Okay, in this video, I wanna discuss kind of scaling into entries because I was I was doing the stream today and I was talking about my uni entries that I've been taking and kind of the way that they're scattered around. And I'm still using market for these entries, and I'll confirm that again when we take a look at some charts. But I wanted to look at lower time frame position building and higher time frame position building. You know, it applies there. You know, just the same, but under slightly different conditions for the higher time frame. So let's take a look at something like uni. It's probably better than link right now to take a look at. And you can look at this from two different perspectives. Okay, we can look at support and resistance perspective, and then we can also take a look at what it looks like for divergence perspective as well. So we'll take a look at a couple of different options in here. Okay, so first of all, these are the levels that I've got mapped for uni, and it's very important that you have levels like this whenever you're trading lower time frame. It's still really important that you have some sort of basis that you're trading between. As we can see, these levels from uni are clean, very well responded to, and gives us some basis to be able to try and trade around these levels. So what we're looking at, obviously from a lower time frame scalping perspective, is we're looking at moving into position around some of these levels. So if we take the current level on sushi, for example, and we take a look just around this high here, we've got the 5-minute chart here. Okay, now what we're looking at doing is scaling into an entry, because there's two things that we want. Number one is we want an entry that's protected. So we don't just want to have 100% exposure, because we may have 100% exposure at an incorrect point or at a point that becomes weaker, okay, and allows us to get a better entry by slightly delaying that. So if we look around this support and resistance flip here, you know, what we can do is, you know, sometimes, especially when scalping, we can be very keen to just move into it as soon as it happens, okay? And, you know, one thing to keep in mind is that support and resistance levels can act in that way for a length of time before anything actually happens in terms of movement away from the level. So we're seeing that at the moment on uni here, where we're starting to see a push down now away from this resistance level over here. And I scaled into an entry here, which has left me in at 449. And this will either be good or bad depending on the market conditions right now, but we'll take a look at how I built that. So first of all, what I'm looking at doing is building a position immediately on the support or resistance touch. So at this point here, I'm looking at getting some of the position established. So this is an opportunity right here for me to get into some of my position. Now, what does some look like? Well, that's going to look different for you, and it's going to look different for me. For me, it's about 20%, 25%, 30%, depending on the setup. That's what I'm looking at scaling into an area like this. Then what I'm looking at doing is monitoring the action, because like I said, it's very rare that we get an instant touch as a retest and immediately do this and V in the other direction. So what I'm looking at doing now is just monitoring the price action. Are we going to have any divergences that form? Are we going to have any continued taps into this region? And I like to set out a boundary. So we can see from this original candle here, this was the sell-off level. Okay, so when I say this is the sell-off level, what I'm referring to is this is the level that price came back down to after the initial tap into that support and resistance region that I have mapped out. Okay, so this here is where we tapped into. Now this is important to me because what it indicates is that, number one, we saw selling pressure at this resistance flip here, and it also gives me a barometer of where the sellers were happy to kind of push the price down to and where the buyers didn't respond. So when we're looking at this now, this line in here at 453 basically becomes my point that when we get above it, I can think about adding positions. Okay, I can think about adding positions. And if we look at the other example, which is here at the support level, okay, we look at this as a support flip here, and we can see a similar reaction. Okay, this is the level, because this is the level that the initial touch responded to. And we can see that buying below this level would have actually given you a relatively decent scalp back up to here. You know, certainly a 15-20 cents play on this move by just scalping from beneath this original reaction level up into this high. And so when we look at uni here, it's exactly the same process. Okay, this is the level we reacted to. This is the level that I would expect sellers to be present, and this is where I'm looking at basically adding each time we get above here. Small little adds to the position each time we get above this level. So as you can see, build another chunk of the position above here. And then what I'm really looking for then, okay, is confirmation of a move away from the area. And again, this is going to look different to different people depending on, you know, what you're trading, how you're trading it. But I want to see some sort of move away from the area, right? So I'm happy to build at a resistance point, but I also need to see that, you know, there is an indication to bring the price away from it. So when we're looking at uni, like here, is I want to see this structure change, right? This is exactly what I want to see, is the structure change. So let's just get rid of some of the crap on this area. And then we'll dive into the 1 minute and take a look at the structure change here. So we can see here, here's the high, here's the low, right? Protected against the other lows throughout here. Here's the lower high, again, above the line that we had set out here. And here's the lower low. So once I get the market structure break on the 1 minute, I'm happy to begin completing the full position. Because now I'm happy that, number one, I added in the areas that I believe the sellers were already operating in and reflected a resistance level for me. And then secondly, I'm now seeing the signs on a lower time frame that the sellers are beginning to win this battle. Okay, and that's the simplest way to put it. So what we get here is obviously our high, low, high, fresh, deeper low. Okay, so we've got that nice market structure here. And obviously what we don't want to see is us getting back above a high here. But then we can begin to look at other levels in here. So by this time, by this market structure break, this is the completion of my position, right? This is where I'm happy to say, okay, I'm now in 100% of my position, having built all the way through this region, you know, in 5, 6, 7, 8 different orders. Now I'm happy to be in full position here. So it works out that, as I said, my average is up here based on looking at adding above. So I'm looking at adding in the relative positions of strength. You know, when you look at this, what I'm looking at doing is adding at the points that I believe the sellers are operating in. Therefore, I'm just joining the stronger side, my interpretation at this point, and then waiting for confirmation of the sellers to start winning this battle. That's really what I'm looking at doing in areas like this. So when we're looking at position building on lower time frame, remember that it's really not a sprint. Okay, it's not a sprint. And what you're far better doing, and also you're better doing this from a stopping perspective as well. Because a lot of the times what can happen is that when you're scalping areas like this, let's just say you're going to play this support level, and let's say it bounced a little bit stronger than this. But let's say you're playing this support level. What people have a tendency to do is to buy the support level immediately. So they'll buy this level. Let's not even map it out with this. They'll buy this level here because it's a support touch. And immediately in their heads, they imagine that this is going to bounce away, right? Like this. So what happens is when this bounces up here and comes back down, people market close their position. Okay, then we bounce away again and people market back in because they think, oh shit, this is it now. It's happening now. Okay, and then it falls back down and they market close their position. And then it comes back here and they think, oh shit, is this level going to break? Is this going to hold now? Okay, so what tends to happen is if we just enter 100% positions the first time we tap into some of these levels, or indeed the first time that we create some divergences, we put ourselves in a position where it can be very, very difficult to manage from that point onwards, because you're over-invested in a position that you establish way too early. And in this example on uni, you've basically got the best part of an hour to wait until we move away from this level. So what you've done is you've put yourself in an awkward position by positioning 100% immediately, which means that this you're panicked on, this you're panicked on, this you may have flipped position on, this you may have flipped position on, right? So there's lots of different flips in here. Now, if you just instead look at this level and take 20%, what this does is this protects you. So if this rips lower, okay, so what? It's only 20% of a full position that you've now taken a loss on, which is a far reduced percentage. So fantastic. Great start there. If we hang around this level, okay, you get the opportunity to add 20%, add 20%, add 20%, without the idea ever leaving your mind that this is still an area to be building position versus flipping positions. Okay, I hope that's clear and understandable here. So we're really looking to position small and often around sensible levels to ensure that we just stay in the same position. We don't have all those nasty fees in and out of positions. We're not changing bias left and right. We're just looking at staying in the same position, okay, monitoring that position, and then that's it. And the same rule applies on divergences. So we had a really nice divergence on uni again today. Yeah, all the way up here. Okay, so we had a really nice divergence all the way over here on uni today. So we saw divergence creation here, okay, right at this overextended region, and then the higher push up that also diverged. And we know that in these positions, we know that divergences don't always just happen once, right? And then they magically perform. They can often build like this for a while. So really important, when we've got divergences like this that are present, okay, we need to build slowly. So we're going to be building, either 50% on a confirmation of one divergence here and 50% on the confirmation of another. Gives you a nice average, right? And this was a relatively aggressive one. It didn't give you a huge play out from it. But it gives you that opportunity to not be in 100% of a position right here. Get stopped out as we go higher. Debate re-entering. Okay, maybe re-enter on this one. Stop yourself out again here. Right, puts you in a really awkward spot. So if we build nice and slow through these regions without any rush to get into position quickly, it's really going to serve us well. And we can apply that market structure logic to our divergences as well. We can wait until the structure gives us something, maybe on the minute. The structure gives us something like down here, okay, on the break of this. Right, gives you this nice structure break down here to be able to complete your position and move in deeper into this, right? So super, super important. Pace yourself. Pace your position creation. Even when you're scalping, we're not just going 100% smack, there we go, all done. Right? We're taking our time. We're building the position slowly as the signals allow us to build the position. Because when the big guys are filling, and the big guys are scalping as well, when they're filling positions, they're not just filling all of their orders in one smash. Right, they're doing it over time, which is why you see areas like this at support. And it's why you see areas like this at resistance. Because these guys are not just like market sell, done, goodbye. Right, they're like build, 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 build. And these lines are really helpful for taking the same approach as them. Okay, for taking that same logic of trying to build above, right? And then waiting for the market structure break and then taking the profit on the back of this. So really, really important in areas like this. Same logic applies to the 4-hour charts. If you're a higher time frame and you're building on a higher time frame, the same process is present there. If we have divergences, if we have market structure breaks, these are all great ways to slowly build a position. One of the things that's so important is to truly appreciate the amount of time you have to build positions. It's never a race to have to get into these positions super quickly. Never a race to do that. It's really just about careful consideration about how you slowly build up those positions to make a size that gives you your full allocation, the way that you would like to trade. But there's no rush in getting to that point. Said price very rarely V's off of bottoms or tops. And if it does, there will always be retests or movement back into those regions that you can look at playing from. So keep all of that in mind. You know, it's super, super important when scalping, because it helps us to avoid this flip-flopping of bias and this flip-flopping of positions that I know affects a lot of people. Because you're visually charged, you're spotting something, you naturally take the assumption that's it, that's the resistance, right? It's pushing away, I've missed the trade. So you jump in late, or you don't wait. And you also get guided by strong 1 minute candles. That's another thing that happens. You get guided visually by candles that look strong in one direction or another, and you begin to flip-flop around with your bias and thought process at points like this. So super, super important, okay? I hope that this video has kind of given you an overview to how I think about position building. And as we can see, this position on Unino has worked out really, really nicely. I'm up nearly $900 just on this position from, you know, the last 15 minutes or so. So, you know, building slowly over time will get the rewards, and it stops you from changing your approach multiple times within a small range like this, when really you had one aim, and that was get short. Right? You had one aim to get short, and that's all you needed to do here. And so I hope this discussion on position building and thinking about the ways that you can build position is helpful. The only thing to add on to this is that this may look different for you, right? This may look different for you because you may have a different style. You may choose to build your positions slightly differently to the way I build them. That's fine, as long as you take the key message from this, that time is in your favor, it's on your side, and that you have the ability to create this position. It's the most important thing that I can pass on. Okay, hope this was good. Time to go back to WoW. Enjoy the rest of the evening, and I'll speak to you guys on the next one.